Hi, thanks so much for joining in. You're watching Your Money Matters on NDTV Profit, and my name is Alex Matthew. All day today, we've been speaking about the implications of Liberation Day, as Donald Trump calls it, in the US. There's been a spate of increases in tariffs that he has announced. And we've been trying to parse the information and try and get you to understand the implications for the Indian investor and indeed for the Indian equity market as a whole. And well, there may not be very easy answers to some of the questions that you're asking. What does it mean for me? What does it mean for my strategy? But those are important questions to ask nonetheless. So we'll talk about that, and we'll also talk about the fad, if you can call it that emerged over the course of the last 3 or 4 years of investing in international assets, international equities. Of course, those taps had to close because limits were hit. And a lot of people ventured into ETFs to the extent that some of those ETFs that are trading right now, that are open, are trading at an 18%, 20% premium to the net asset value. We'll talk about all of that and more on today's program. Joining me in studio is Vijai Mantri. He needs no introduction. Vijay, thanks so much for taking the time for speaking to me. Let's address the elephant in the room, so to speak, and that big question, which is, Mera kya hoga? What happens to me in the context of what Donald Trump has announced late at night for us here in India, and how should I change my investment? Should I change my investment strategy at all?
So basically what we're talking about is risk in the market. Okay, risk is something which is completely come from an unexpected source. Risk is something which is completely unknown. What Trump is going to do was known. Only the quantum and direction or intensity was not known.
Yeah.
So if you look at when Trump came in 2016, when Brexit happened, what happened? The market corrected itself in few days' time. So I won't change anything in my portfolio, even to my client's portfolio, because we have seen much worse event in Indian equity market. For instance, right now, the Trump is looking like unprecedented thing. But what happened in 2020 when COVID hit? Everybody thought it's going to be unprecedented thing. And let's see the headline narrative at that time. People were saying move toward gold. People were saying move toward high ROE, great companies, cash flows, and all these great companies. But after 1 year, the best performing stock in Nifty was Hindalco.
Yes.
Which was not even discussed at that time, but was down and dumb. So I think in any given equation, there are always winners and losers. So our job is to avoid losers and identify winners. And whom do we trust to do that job? I would rather trust an entrepreneur to find out where his business is heading. And as a professional, I look at a fund manager whose job is to identify which business or set of businesses are going to win and they have in the portfolio. And what is very, very interesting today, if you see today morning headline before 9:15, people are saying Indian market will tank and we'll have all kind of problem. Interestingly, among all the global market, India is the least impacted. And it's not because of any favorable thing done by Trump to India. It is because of inherent strength of Indian economy, the power of 145 crore people. And a very small trivia, the IPL is going on, and today broadcast right of IPL is next only to National Football League.
Wow.
Wow, it is the power of 145 crore people. So there's a Navratra, a lot of people are fasting. Sometime I believe that we need to have fasting from information as well.
Okay, so that's a good point that you're making. I also want to talk about this whole concept of investing in assets abroad. And this is a theme, we've discussed it as well, Vijay, in the past months and years. And people venture into this because of opportunities that have arisen, no doubt. But already that narrative has gotten shaken a little bit because you're talking about growth that is likely going to be affected in the US. You've seen a pretty bad month for US equities in the month of March. That pain is likely to continue for some time. You have question marks about Chinese growth. So those are the two big markets that you would take exposure to. At this juncture, do you think that people should not be venturing out to invest internationally?
So it's a very interesting question to pose before yourself when you're looking at your own asset allocation. The question is that if today what Trump is doing, you are not very clear on your domestic economy, how will you figure out which economy to benefit? That's the point number one. Point number two, which economy you would like to put money? Latin America or Japan, Taiwan or USA, Europe or China? Where are you going to put the money? And within that, which segment of the market would you put money in? Just look at DeepSeek effect. Before DeepSeek, the Feb 7 was the darling of the market.
Yeah.
And after that, what you've seen in 4-5 months, the Hang Seng Tech ETF has delivered 89% return in INR term.
Yes.
But in spite of doing that, 4-5 years returns are not very great, or 10 years returns are not very great, even from those indices. So the question is that which index would you put money to? For instance, last 1 year return as on 31st March 2025 of Taiwan fund is negative 13%. Now, 1 year back, semiconductor was the talk of the town.
100%.
Okay, and if you look at the fund, international fund which deliver negative return, most of them are the new theme like climate change, ESG, innovation, aqua, all of the things which sound very, very historic in nature. But if you want historic in nature, watch the movie, watch the play, read a book. But when it comes to investing, sometimes boring works. And for us, boring works. I would rather put it differently. Rather than stretching myself to look at various geography, I would look at in domestic market beyond Nifty 50 or Nifty 100 or Nifty 500 and would look at which are theme or sector. Sectors are pretty narrow, but theme suppose you look at. So in my opinion, BFSI is a great theme to look from a multi-year perspective. Healthcare is a fantastic theme to look at.
Which includes pharma.
Pharma is part of it. Earlier, when you used to talk about healthcare, it was just pharmaceutical company. Earlier, when you used to talk about BFSI, only bank. But now that has completely changed because we have so many listed entities across wealth, stock exchanges, rating companies, mutual fund, all kind of stuff. Same in healthcare. It is just not pharmaceutical. You have a diagnostic center, you have a hospital, you have a contract manufacturing, you have a biosimilar, you have various kind of stuff available to look at investing. Then consumption. And consumption is not FMCG. And what we have seen is very, very dramatic. People look at FMCG's sales not growing, but in my opinion, I think FMCG's best days, perhaps behind us, maybe. Because what is happening, the consumption is moving beyond noodles and shampoos and biscuits. So I'll give you some perspective. If you look at total turnover of HUL is 60,000 crore, and if you look at total FMCG turnover is 15 lakh crore in India, and you look at how many people visited Kumbh, around 60 crore. And suppose you look at a person spending average 1,000 rupees, that is 60,000 crore. So consumption is moving somewhere else. Perhaps not to the, but we stuck in the old
world ideas of.
And if you look at Philip Kotler's 4P in products, so price, promotion, place. If you look at place distribution, the FMCG are a great strength in form of kiosk, moms and pop shows. Suppose you want to go out and buy something, the display will tell you what to buy. Today the P is your palm.
Right.
So that is a complete,
dramatic shift.
And you see if you see the advertisement, IPL is the hottest property as far as television advertisement is concerned. Have you seen an FMCG company advertising?
No, so I haven't. So I must confess, I don't pay too much attention to the ads.
Maybe but where do you see? You see Angel One, you see MP Mutual Funds, you see all kind of stuff. So this is where the money is actually flowing in. So in my
so you did share some data with me, Vijay, and I want to talk about that briefly to try and understand what you're talking about, because you've shared over a certain time period the performance of international funds, and you've taken a collective here, and you've taken the average of thematic and sectoral funds, and you've talked about the worst performing, the best performing. What does that data tell you?
So it's very interesting. So what I looked at on 31st March 2025, I looked at last 1 year, 3 year, 5 year, 10 years, all international funds performance, those who were there 10 years back, 5 years back, 3 years back, 1 year back. What is the average return they deliver? What is the best among them has delivered? What is the worst among them has delivered? And compare that with thematic and sectoral fund. I also looked at among thematic and sectoral fund, which fund category, which funds has delivered less than 10% or negative return. Across all these parameters, thematic and sectoral fund generated 5 to 6% more return. Blended, absolutely. Okay. Even the best and worst. Only in last 1 year, the Hang Seng Tech ETF has outperformed.
Because of its 89%
completely outlier. But if you look at data, average or whatever data you look at, 1, 3, 5, 10-year period, thematic and sectoral fund in India has done much better than even at the peak of NASDAQ. I looked at data. NASDAQ fund and I compared that with Indian IT sector fund. They were outperforming.
So then why is it that people have gone out and said so many times over the last 3 years, you must invest in international funds? Why is that?
Because in India, most of the theory in the finance and economy come from Western world.
Okay.
And all these products are created by these people. And it also gives you bragging right. When you say I invested in Nifty fund, or I say I invested in Brazil fund or Taiwan fund, it gives you bragging right.
It sounds fancy.
It sounds fancy, it gives you some intellectual bragging right. But if you look at investment performance, if you got Hang Seng Tech, it is by sheer luck you got into that fund. And how much part of your allocation you...
Okay, so let's talk about this. If I were to ask you, and obviously it's not a simple answer. At this juncture, people are thinking, how do I Trump-proof my portfolio? Is it possible to do that? Maybe not, but you would focus on domestic. And you're saying domestic is such a phenomenal story to benefit from.
Yes.
So how do you do that?
So absolutely, there's no way if you're going in the water, there will no way you can remain wet. You can remain dry.
Yeah.
Absolutely. Anybody telling you that I'll make this proof or that proof, interest rate proof, Fed proof, RBI proof, government proof, political proof, nothing
possible.
like that happen. Okay. So these are all fancy words. So in equity market, the money is only made through volatility, and if you can't accept volatility, it is not a place for you.
Fixed income is for you.
Even fixed income, except FD, where there's a huge volatility, because if interest rate goes up, you're stuck in FD. People don't know that the kind of risk they're taking. And if you look at inflation of food, of anything, is 7 to 8%, and government gives 6% inflation data. So in the long term, in debt, you're actually losing money.
So then tell me this, at this juncture with everybody, and you spoke about this, the narrative that is generated when you have these overarching events. COVID-19 you spoke about, gold was spoken about at that time. Gold is being spoken about right now. We're talking about gold at over $3,100 in the international market and over 90,000 here. People are saying go out and buy now because it could hit $4,000, it could hit $5,000 in a year, 2 years time. Do you buy into that argument?
In 2008, I heard the same story about silver. When silver was 50 to 60,000.
They're talking about it now.
People said it will touch 1 lakh. And then it took almost 15 years to reach to those level. And silver in long term has outperformed gold, by the way. But it is much more volatile compared to gold. So I looked at some interesting data. And the data is that whenever the gold's return has exceeded Nifty, in future Nifty made more money for you.
And what is
10-year period?
Any
10-year period,
okay.
If gold has delivered more return than Nifty, there's a more value in the Nifty.
And in the following what?
In the following 3 to 5 years to make more money.
Okay.
But people make money in gold not because of view. The holding period is much longer. The patient capital come in gold. So when you buy gold, nobody look at the view. When you go and buy jewelry, nobody look at world event. You want to buy jewelry. But when it comes to equity, we have too much gyan, and this gyan actually create more problems for us.
So here's the thing. I've spoken to a few people today, Vijay, about gold, and one person very clearly said that it appears, and very prominent investor said that it appears that there is, just like at some point in the equity markets, there is an over-exuberance in gold as well. That's evident to him. He's not going to go out and buy gold. What would you advise?
Actually, 11th March, if I remember the date correctly, 11th March I tweeted on my social media and everywhere, on LinkedIn, on Facebook and on X, is that I have very small allocation to gold ETF, and I told that I'm shifting through systematic transfer plan into equity fund in next 12 months. So I'm not talking, actually, I'm just saying what I've done. So equity market have some metrics.
Into what in the equity market?
In the equity market, BFSI, I chose one of the BFSI fund. And in equity market, your metrics like P multiple, price to book value and all kind of stuff. Gold.
There are too many factors affecting it.
What is the one factor?
Well, geopolitics.
There's always been the case. There's always been the case. And geopolitical is always in very small part of the world, not the whole world get impacted. But gold is very interesting. If you look at gold, the biggest bull market in the gold happened from 1970 to 1980, where the gold prices actually appreciated. Indian rupee around 24 to 25 time in a 10-year period. But from 1980 to 2004, gold has gone down from $850 to $250. For a 24-year period, asset categories depreciated more than 60%.
Right.
What happened in 2004? Suddenly, in 2004, we have ETF. So a normal folks can go and then buy gold.
Yeah.
But at these level, I'll be taking money out. No, I'm not careful. I'm taking money out. Not question to be careful. Even the gold metas 4,000, I don't care. The odds today are in favor of putting money in Nifty compared to gold.
Last question, and this has to do with allocation right now. You've already spoken about picking themes that are perhaps beaten down and looking at allocation in the Indian equity market. But in terms of overexposure, where do you need to draw the line so that you're not overexposed to any one theme, strategy point of view?
So I think if you want to go to thematic fund and sectoral fund, definitely you need a very good advisor to help you and take money out whenever. So for instance, in 2020, we took a call to go into pharma and PSUs, but we took money out in 2023-24. That kind of alertness or nimbleness is required in your portfolio. If you don't want to do that right now, in my opinion, large cap is in very good shape. And if you want to have some flavor, then you go for flexi cap. Else, DIY cannot be done until it is your full-time job. So my request to anybody, look at Nifty, look at large cap, and BFSI, in my opinion, is a great segment. And within that, in my opinion, private banks, and there's a product available which only invests in private bank. And we have been advocating from January onward to our client. And we have seen even in this carnage, they held themselves, which is very interesting.
Certainly.
In spite of having one stock, IndusInd Bank, tanking and then recovering, but the exposure only 5%, but 85% was into.
I think if I'm not mistaken, one of the best performing large caps in FY25 has been HDFC Bank, with 25 odd percent.
And most of these returns perhaps came in last 6 months only.
Interesting.
Where people was writing it down.
Yeah. So very interesting takeaways from this conversation. Vijay, thanks so much for taking the time and for joining in. This should give you some perspective on how to parse the events of today. And be sure to check with your financial advisor when it comes to how to deploy your funds in this kind of a market in particular.